Hey guys, welcome back to the channel. In this video, I will examine if you are looking to invest in Bitcoin, whether you should invest in what's called a Bitcoin ETF or purchasing Bitcoin on an online exchange. So for starts, what is a Bitcoin ETF? A Bitcoin ETF is an exchange-traded fund that correlates directly to the price of Bitcoin. To simplify it for you, the money you use to buy a Bitcoin ETF is directly invested in Bitcoin, which in a way means that you kind of own Bitcoin. When Bitcoin goes up, your ETF goes up. So, why would someone invest in a Bitcoin ETF instead of purchasing actual Bitcoin on a crypto exchange? For one, let's look at simplicity. Investing in a Bitcoin ETF provides efficient and simplified access to digital assets for investors. You are able to hold all of your investments, whether it be your stocks, mutual funds, and or bonds, all in one account, along with your Bitcoin ETF. This really provides you convenience and simplifies your life. A Bitcoin ETF can be purchased from your bank or with your personal online broker account. You save time by not having to verify yourself on an online crypto exchange. Not only that, but the lack of customer service that you do sometimes receive on these platforms can at times be frustrating. Purchasing cryptocurrency on online exchanges can be confusing at times, especially when it comes to the fees involved in depositing or withdrawing funds to and from your bank institution. Sometimes the process for purchasing crypto assets themselves can be also unclear. This may deter some of the older investors away who may want to invest an allocation in cryptocurrency but may not be as tech savvy. The commissions can also add up over time when purchasing Bitcoin on online exchanges, depending on how many withdrawals and transfers you do make. Lastly, if you do by accident transfer your Bitcoin online, or any cryptocurrency for that matter, to the wrong address, there is always a chance that your assets could be lost forever. Any gains that you make on Bitcoin have to be disclosed as capital gains. So your bottom line net return will always end up being less than the actual gains you make. However, if you are looking to invest in a Bitcoin ETF, you can tax shelter them in a tax-free savings account or in a registered retirement savings plan, both of which are offered to Canadian citizens. You should also be able to hold them in an RDSP, DPSP, and RESP accounts. The probability of your online crypto account on an online exchange being hacked is likely higher than that of holding Bitcoin ETFs in your online brokerage account. Not only that, the Bitcoin that is purchased in the funds are all held in a cold storage. There is no digital wallet required for yourself, and the Bitcoin purchased with your investment is secure. If we take CI investments, for example, the Bitcoin is stored offline in facilities with armed security guards and 24/7 cameras and insurance wrapped all over the Bitcoin. If you also want to feel assurance, a lot of these fund companies, such as CI Investments, do have their own money invested in the funds as well. In addition, a lot of these fund companies leverage their professional management team to execute the purchase and sale of Bitcoin at the best possible price. The fund companies themselves are audited by some of the more larger and reputable firms out there. Some of the recent Bitcoin ETFs are now offering extremely low fees when it comes to managing the fund itself versus other crypto funds and ETFs. CI Galaxy's Bitcoin ETF is currently charging a management fee of 0.40%, while Purpose Bitcoin ETF charges 1%. When you choose to purchase Bitcoin ETFs on certain online brokerages, you may also incur very little commission charges. Questrade, for example, advertises their ETFs as commission-free. As mentioned prior, Bitcoin is normally bought at the best possible price for the funds, and the purchases are typically not conducted through an online exchange. Now that we've touched upon some of the pros of investing in a Bitcoin ETF, let's look at some of the cons. Bitcoin can be purchased 24/7. You are able to react to market swings at any time. However, with a Bitcoin ETF, you can only trade the ETFs during public trading hours. Normally, the standard is from 9:30 a.m. to 4:00 p.m. Monday to Friday. You have to do your research and monitor the funds. A few of the recent Bitcoin ETFs directly hold interests only in Bitcoin. However, there is a possibility down the road that in a bid to diversify the portfolio, the fund companies may choose to add other asset classes. Some funds already do, so if you are looking to invest in Bitcoin only, this may be a hindrance for you. Bitcoin can be traded and converted for other cryptocurrencies like Ethereum, Litecoin, XRP, and more. A Bitcoin ETF would not be eligible to trade for other cryptos as it is not a cryptocurrency but simply an investment fund that tracks the price of Bitcoin. Staking is another opportunity for crypto investors where they can lock up their crypto assets such as Ethereum after converting Bitcoin to Ethereum, which would be lended for mining purposes, where in turn, the crypto lender would receive interest. This opportunity would be eliminated if you choose to purchase a Bitcoin ETF. Although the management fees to manage the funds do seem low, the more that one chooses to invest in Bitcoin, the more the fees would add up over time, which can become expensive. Lastly, lack of ownership. Bitcoin can potentially serve as a hedge against central banks, fiat currencies, and equities. By being independent of central banks, Bitcoin provides a way to limit the risks associated with the financial system, such as manipulation by institutional investors. Bitcoin also protects users and investors by providing privacy through the Bitcoin blockchain. One of the main selling points that attracted and continue to attract crypto investors is the unique separation of the assets from the regulated bodies. A Bitcoin ETF would be regulated by the government, which would eliminate these perceived advantages. So, these are some of the pros and cons when it comes to investing in a Bitcoin ETF. We should not also disregard the fact that the cryptocurrency space as a whole is still extremely volatile and risky, regardless which investment vehicle you may consider. Still, many investors are now looking to allocate a percentage towards Bitcoin, and the ETF can act as a good alternative as we start to see more ETFs for crypto like Ethereum also starting to emerge. Thanks for watching, guys. I hope you guys enjoyed the video. If you guys did enjoy the video, please feel free to like it, subscribe to the channel, and ring the bell for notifications. And until then, stay safe, and we'll see you guys soon.